Hey everybody, great to be back with you. Mike Fairboard for Swing Trading here today, folks. Hey, I wanted to look at a mechanical approach that we can use right on the Thinkorswim platform to help us with that swing trade time frame, an area of time that a lot of traders, investors will look at for what they would consider to be sort of confirmation, or they want to get some additional insights as to, hey, do we have a swing trade actually unfolding? It actually kind of works pretty well too this time of year with that potential year-end rally, the Santa Claus rally, to see if it fits, because that time frame fits the swing time frame pretty well along with it. So looking forward to getting through with that, sharing that, and actually diving into a scan as well, because I want you guys to be able to see these as they come up. We'll just call that, hey, a Christmas present, right? Towards the end of the year as well. But it is great to have, and I think you'll agree when you see it, folks. But hey, good to be back with you and seeing a lot of familiar names. We are joined in the chat by a good friend, really good friend of mine, colleague, Brent Moores. I've known Brent for a very, very long time. It has been great to work with him and very knowledgeable and experienced. And thanks to have him in the chat as well. Thanks to him for being there. And folks, any questions, comments you have, throw those in the chat so we can address them for you. You can follow Brent and I on X. You can follow Brent Moore CS, Mike Fairborn CS. Hello to you, Richard J. Richardson. Good to have you here, as well as Roja. We've got Scott, Luck, Riceberg, Vicky, and others. Welcome. All right, let's hit some disclosures to get going here. Now, the information we have here is for general information purposes only and should not be considered an individualized recommendation. Okay, the paper money software application is for educational purposes only. Investing does involve risk, including the loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results, and dividends are not guaranteed. Also, let me just state, too, in case we do dive into options a little bit, options carry a high level of risk. They're not suitable for all investors, and certain requirements must be met to trade options through Schwab. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Okay, and with that, we're going to take a look at the market here briefly and take a look and see where we're at. We talked a little bit about this last week in the markets and sectors class about the possibility of the Santa Claus rally. We did not actually have one last year, but there is a tendency, as we talked about, and that's why they bring it up, well, sometime, for prices to rally towards the end of the year. The tendency comes from this. So some people could say, hey, yeah, on average, using a set number of years, 5, 10, or 20 years, we might tend to get a little bit of a rally towards the end of the year. How are we getting that? We are right up here into the style. I'm just going to shoot on down to chart mode and then to seasonality to highlight this for you all. That is that rally. I'm going to actually adjust this real quick, percentage basis, so we can see it going back 5 years. But this little rally over here, towards the end of the year, you can kind of see it right there. From the 24th on to the end of the year, and then the first 2 days of January is generally where traders will look for the Santa Claus rally. We talked about it. We said, hey, there's a bit of a bull flag, and I know many of you had brought this up before, because you guys do look at bull flags, and don't even try to tell me you don't, because I see in the chats, you guys will type that in. You do look at bull flags, and we look at a lot of bull flags in this class, right? We do. By the way, 5-year, watch this, 10-year, see it move up. 20-year, I've seen a 50-year look very familiar. Now, obviously, the 50-year is going to include the 5, 10, and 20. So it actually kind of keeps a lot of it going towards the 50. But that's the rally we're talking about. Is it the 24th yet, folks? One more day. But still, you can get the rally that can happen beforehand. And that's really what I wanted to show you. Because was the market in an interesting spot? Well, it kind of was. I mean, we'd rallied up, we'd pulled back on the upside of a longer term trend, and a lot of stocks, we got 500 of them, well, the S&P 500, that could also be looking a lot like the index, right? That's why the index kind of looks that way sometimes. A lot of companies are showing that kind of a setup. Where are we at right now? This is a very interesting level, because we might be on the verge of actually a new, at least closing high today. We don't know if we'll get it. This would be an all-time high S&P 500 right there, folks. Of course, we didn't close up there. We closed down here. That was our highest close, and we're above that right now. So another indication of a breakout. Quick note. I have to bring this up. I just have to. Because why? Well, we are talking about flags, and in this class, we address those pretty frequently. Now, before I do that, though, let's get us back to our regular chart without those percentages. Okay, we're back to our standard numbers over here. And what I want to point out now is this. In this class, we talked about the flag pattern. Going back up to the high is a T1. That's our target 1. Okay, this is for the market. So just park this in the back of your mind as we look at this. So the market, these are not individual stocks just yet, but keep in mind, we're looking at the market, there might be plenty. Where might T2 be? T2 would be estimated to be around this price range, moved up to here, right off of that low. And so I'm just kind of like estimating over here, will we come up to the T2 target or not? That could fit very nicely into a Santa Claus rally, that year-end seasonal rally, folks, if in fact we get it. Because what's that line right there? That is 2025. We made it through another volatile year at that point in time. But still, see what I'm saying? It falls within the T2 flag pattern target. All right. So that's right. Welcome to you, Wiley, as well as others joining us on board. Yep, JD, as well as Jim and others. Cecile, great to have you. All right, so let's do this. Let's hit some of our prior week's discussions here too. What we were looking at last week. Then we'll dive into our core topic. But you guys might remember this. Oh, by the way, you probably see that T2 target in there. It's not a small target. I realize it's a longer one. This is AKAM, Akamai. And this guy had that interesting gap down and gap up. And we went ahead and just called that, well, it is a pattern. An island reversal is what it's referred to as, with that rounded bottom. And some would even say, yeah, Mike, I'm seeing the cup and handle over here too. At least a bull flag, right? Which is kind of the end of the handle of that cup. That's the cup right there. And that's that portion right there. If we're just examining that, you can see a bull flag right in that cup. Just so happens you might get a rounded bottom. You might get an island reversal. You might get some other patterns that make up that longer term flag. But that's what we've got right there. And that's a big move. We started with an earnings beat, big move up, consolidation. T1 target yet? Not yet. Not there. Some might take it at that T1 target. But look what we have up here. The T2. And you'll notice that lines right up with our target. Remember what we said last time? We said a couple of different things. We said sometimes on the T1, if it breaks a new high, some traders, folks, they'll just have a tendency to add to that. Because why? Because we're getting, maybe in the mind of a trader, an additional level of confirmation that swing trade is working its way through. And in terms of the flag, and we might end up getting the T2. Because if we start to break highs over here, well, then maybe this flag pattern, maybe the island reversal and the cup and handle all start to make more sense. And so instead of just 50 over here, what do? We just go ahead and add 50 right there. Another 50. Some might do it. We're going to do that here if we break above that T1. And a lot of times I just like to be mindful of that. So I'm going to be watching this very carefully here for something like that to unfold. Okay. But that's kind of steady as she goes right now. Like I said, we're up about 105, 104, 105. We're actually down today because it did dip a little bit, but sort of steady as she goes to unfold. Now, I've got to say this and pause for a second. The moving average scenarios, because there's more than one for that additional confirmation in this mechanical system we're looking at today, would be looking to spot something like this. I'm not even kidding you, like right in here. It's looking for that level of confirmation. And you're going to see that very clearly and be able to scan for it in just a bit, okay, as we go through this. But there you go. Here's another one we looked at. Now, I might have done this one in my ThinkScript class, but this is one, that we looked at, CRM, Salesforce along the bottom. You might see a smaller term. It too had an earnings beat over here that the market said it liked. I mean, it ran up, I should say, It responded positively is the way I'd put that. But you see a small cup and handle right there? It's sort of a shorter term, but I've already overlaid within that the bull flag target range. Yet to hit the T1. We have not hit the T1, but our T2 is residing just above this level right here. Now, what we get above it, it remains to be seen. We're just kind of barely sort of moving out of the base where we bought, yes, just 25 shares. It's an expensive stock. I was thinking about maybe adding 25 on the breakout here. Haven't got it yet. Anyways, still as steady as she goes on this one. A trader might like what they see at this point in time. And I would just say this. What do we call this? Oh, well, there's a little bit of a dip down here. I agree. A little bit of a dip right there, but right over here, what do we got? 1. That's very close to 2. 2, 3. We'll go ahead and call that the triple bottom. It has 3 touches, right? And it's confirmed, though, when you start to break above the highs, which we came close to. We'll see this one's been down for a little bit, but still, maybe in the process of forming a little bit of longer-term bottom, right? Yeah, Sri, it can. You can also see a bull flag within there, too. You guys will see that in the covenant. I'm seeing it right there. I think Sri's talking about that right there. We did take out, these closing high prices. We actually took out this high too, right there. But we're looking at this move and we're saying, okay. And sometimes we'll see pennants here, pennants. Okay, pennants, yeah. And they might do this. They're a little bit of a triangle that follows. Instead of a flag, you might get this compressing range. And traders are also good with that. Many of them will say, well, hey, it's still holding there, holding its main range. And then they're waiting for what? Boom. Maybe a move to the upside. Well, we've got to talk about more potential moves to the upside because what I wanted to do right now was actually kind of move in a little bit. Oh, let's see. Sri says resistance at 275 on CR. Yeah, so by the way, I like the idea of looking at long-term resistance. And why is that important? Because to the point that Sri's making there in the notes, think about this. Here's the 275. I'm going to draw a line right over there. I'm seeing it too. I'm seeing that. And a quick note. I'm so anxious to get into this stuff, but this is such a good point. We got to bring it up. We got to talk about it. And these are, by the way, these are good levels to take, the high range. A lot of times I just use the closing prices. So don't fault me, you guys, for using the top. Use the tops if you want to. It approximates the range roughly the same. I'm going to go right down to this bottom right here, these closing prices right there. Look at that. What? Oh, okay, I was going to say, oh, that's the 50. Yeah. So look at some of these fibs because they do help to give us some levels, and that is so close to what Sri was talking about, the 275. So see, they can kind of help to anchor us a little bit. And now ultimately, some traders would say, yeah, look at that. You come up here, some might just decide to take it off the table, but it really comes down to this too. Let the market tell me what the price action is at that level. Because if we go up here and we just do one of these and just kind of dance around this level a little bit, well, there's resistance. And some traders will say, take the trade off the table. Take it off because you're so close to resistance. Just if it breaks back up above, maybe you can get back in and try to trade to the next level. And by the way, that 50%, whoop, right over there, folks, it's so close to what? The T2 target. So they're very, very close. And sometimes you'll see prices bounce. They might do like a shooting star, hit the level, and then come back down. So many possibilities. But the good thing is to be mindful of these levels so that when they do come up, you've already got them painted on the chart in your mind. You're aware of them. You're right. You can see them. I'm going to leave those on there too. It's a great way to kind of get a sense of, hey, will it maybe anchor at this level? Yeah, that's a Fibonacci. Exactly. And by the way, I'm getting the fibs. I went through that kind of fast. Bottom right-hand corner, I'm going to actually point to it too. Right there. Easiest way to get to it. Just click on your drawing tool. Right now it's a diagonal line. And then, folks, you could just pull that up right there. The fib is that percentage sign right there. You got percentage retracements as well, but you got it. Okay. Very good. Well, as I was looking at this and watching some of the potential for a Santa Claus rally begin to take form, really what I wanted to do was to try to create a bit of a mechanical approach, giving us sort of an indication using, um, a swing trading method that also would fit because the swing trade fits pretty well with sort of this Santa Claus rally that some traders refer to it as. I'm just going to share this with you guys just so you have. I put this out. You might find that there are some interesting data points. I said, hey, Santa Claus rally or coal in the stocking? We don't know, but right now it's starting to move a little bit in the direction that some traders see. You might like some of this data that's down in here. It goes back, yeah, I guess till 1950. You can take a look at some of this. I did send this through so you guys could check it out. If you want to see it or anything else Brent or I've got, just go ahead and go right to Brent Moore's CS or Mike Fairborn CS. I've got this right here, so I'll just plug this in. But Brent, definitely share yours as well in the chat as well, so people can go to it, our folks here. All right, but yeah, you can take a look at a few things. By the way, while I'm at it, that was the winter solstice sunset, which is people have corrected me so many times. They say, Mike, it's not the shortest day of the year. And so I just said the year's shortest sunset because it's the shortest daylight in the year. There were some interesting clouds out there that day. By the way, 60 degrees in Utah. Crazy. Brent, I've never seen it in 50 years or so that I've been here. So it's interesting. I hope you guys are getting good weather. I did hear, though, my daughter said that Oklahoma is expecting 70s, 71 or something. Wow. Interesting. All right. Back to the Santa Claus rally, and I do hope we get some snow. I really do. I like the biking, but yeah, great to have the snow as well. All right. So we've talked in this class about short-term moving averages. In fact, we've talked about those that try to reduce the lag time, right? Because we're trying to get, I'm going to pull this up. This is a good example. And this is one of the trades we did that didn't quite unfold. It kept falling. It was an example trade. We said, hey, we're going to take this before the close above the high to low day on Apple because it's got such a nice stretch of higher highs and higher lows and higher highs and higher lows. And sometimes you get these retail type companies that do well in a Santa Claus rally if that were to unfold, right? Retailers, towards the end of the year over that season, it tends to be a pretty strong year. And we've had a fair number of these flags on Apple, and this one could have been no exception, but we're still getting lower lows. It's still higher highs and higher lows, but it's still dipping until we can bounce here. So we had looked in this class about using exponential moving averages. I talked about in the ThinkScript class, we had some coding for the zero lag exponential moving average, also known as the ZLEMMA, I think is how you pronounce it. I'll just pull it up. I'm just over here in Trader Talks, but yeah, ZLEMMA. And you can pull it in, and that's it. That's a very, very quick moving average. It tries to zero out the lag and use an exponential moving average. You can find that here. Encourage you to follow us on Trader Talks too, if you'd like. But sometimes we can also make life simple by using a simple moving average. And it just looks at every day's close over whatever time we're averaging, and it just makes that number count the same across whatever it is. So in other words, a 20-period moving average doesn't say we're going to put more emphasis on the ladder data like an EMA does. It just says make everything basic and straightforward. Now, we can do that, and we can try to get a shorter term signal where it gives us our signal quicker just by reducing the time of that moving average. So an SMA, a simple moving average, folks, and here is the concept. Let's draw that a little bit better. So here's the concept. So an SMA, simple moving average of a 5-period. How many market days in a week? Does that fit a swing trade time frame, a weekly? It does. It fits. It's a very short. So we can still get these quicker entries just by reducing the time of the moving average, because we're just averaging in less data, less time frame right there, right? I mean, there's just less to measure. But then we also are trying to get a little bit of a confirmation of something else. And I'm going to use the longest time frame that is used within a swing trade, which is generally 1 month. And within 1 month, we're going to get about, so this is 20 days. 20 days. Okay. We're going to plot the two together simultaneously, and we're going to be looking at a crossover that shows us this. The 5 period happens to be outpacing the 20 period, and it's crossing above the 20. Now, this is fascinating because we're getting a 1 week over here relative to a 1 month. Both of these fit within that swing trade time frame. One earlier, one later, and we're using the crossover, but we're using a very, very quick moving average here to do it. So what I want to do is I'm going to pull this up. I've added this in right now because I want to show you guys. We're going to put this on right now. First on Apple. We've got a lot to kind of scan through and to take a look at it. By the way, as I was mentioning the Think scripts previously, just park this in the back of your mind. They're not guaranteed for timeliness or accuracy, but as long as the data is flowing through the platform correctly, like closing prices, etc., then they should work mathematically, is what we're talking about. All right, so let's do this. I'm going to go over here, and you guys know it. Look at this. I've got them hidden behind so I can quickly put them on. There's our 5, and there's our 20. And folks, we're simply just looking for a crossover, and there it is. Now you can see what's fascinating here is sometimes you'll get a bounce above that level. I'm going to take a look at this one right here. We do not have one yet on Apple, but do you see right there? When did the crossover occur? Right here. Confirmations are so tricky sometimes. How do we get a confirmation, or at least through the eyes of some traders, that there's more, I should say a confirmation of more evidence is all it is. It's not a confirmation it's going to go higher. We're trying to confirm, is there more information coming through that it might come higher? Let's zoom in on this again. Apple's been an interesting one, but let's do this. Let's take this shorter term. I'll hit a couple of these. There we go. Right here. So when in fact is our blue line, which is our 5, and the 20 is the dotted yellow line, when does the cross occur? Well, it's a little bit later. It's about right here. So I've heard of a hold. I've heard of a higher low. I've heard of zero lag exponential moving average. But when are we getting a sense that we're really starting to get going here? You guys remember AKAM in our review? This is it. What does it look like? See where it's hitting? And I tried to estimate it. And honest to goodness, I didn't even look at AKAM because it was one we already had under our belt. But I said somewhere in this time frame here, I think I was right on the edge of where we got it, but right there. This bar here was a little bit more confirmation as opposed to just a close above the high, the low day, which some traders are waiting for. They want to say, well, is it really showing strength to unfold? And that can help as we look through this. Now, there is something else I'm doing here because there are a lot of crosses down here. This is such a key point, you guys, but look at this. There was a crossover here, a crossover here, a cross here, and so on and so forth, and a cross here, and etc. All these were no good. I mean, they might have run for a couple of days, but what are we missing here? What are you guys seeing? What's the key thing that you might be seeing here that might be different over here in this one? Because this one still came up on these came up on our list, but these guys down here, no way. We cut them out. What do you think's going on? Is there anything that sticks out? I know you guys are thinking this. Where is the trend? The trend is down. And you know one thing we're getting here? The direction. Exactly, Vic. Vic. Okay, yeah, Vic. Thank you. The trend is down. The direction. Look at the direction. The left-hand side of the screen to the right, that's down. There's no getting around it. There we go. You guys are seeing it. Exactly, downtrend. Left side to the right side, that's down. Now, maybe we want to look at companies in the S&P 500 that are at least as strong as the S&P. The S&P has been up. In fact, yep, I've got one more hidden one in here. That's our 50. I'll make it big so we can actually see this too. There's our 50 right there. Look at the 50. We're above the 50-period moving average. A lot of companies were. It's a big basket of stocks. It's 500. Some are above, some are below. In this case, we've got the S&P above. Now, do we want to be trading stocks that are below the 50 here? Or do we want to be trading those that are at least or even stronger than the S&P 500 itself? I think we've made the case there. We want to be trading those that are also responsible for keeping the market, by and large, above its 50, right? At least as strong as the market. Unless, somebody has some great fundamental insights or whatever the case might be, you might be looking elsewhere, but I'm just saying the 50 could be quite helpful. Let's go right over here into our scan tab. You guys, I built this, but I've got to show you how I did it so you guys can see. By the way, don't look at these numbers. Okay, this is an opposite one. These are exactly what we're not looking for. I was gonna highlight the differences, but let's just show you this. If I go into the scan tab up top, because I want to show you guys this, scan, stock hacker, sub tab, got to be in the stock hacker, not these other guys over here. Over to our right, there it is, add filter, study filter. It will default to this ADX crossover. And what I'm gonna do is simply click on my Thinkorswim pencil or pen right there, pull this guy up, and the first thing I'm going to do is delete that ADX crossover, okay? We are going to build 5 crossing above a 20, scan the entire S&P 500 or any market for that matter. We can scan the NYSE if we want to. 2,700 plus stocks very, very quickly, okay? Oftentimes, with just in a few seconds as you click the button, right? Even that many stocks. But what we want to do is, first of all, delete it. Go to our condition wizard. I teach a lot of this stuff on Thursday, but this condition wizard is just a beauty for helping people understand the code and actually just creating simple code, which, by the way, I think in many, many cases is so, so useful just to make it, E equals MC squared level. Just a simple formula, really basic stuff. It's very, very helpful, and it tends to be very exact because otherwise it wouldn't be in the condition wizard, right? We're just looking at indicators and price. First things first, select a condition. Boom. Study. Folks, you can scan through this list. The quickest way, though, is just start typing it in. Simple moving average, double click it, or just click it once. What's our first moving average? Well, it's going to be a 5. Fitting that swing trade time frame. Let's make it as mechanical as we can. Crosses above, that's our action type, and it's simply just going to be a another study, which is a simple moving average right there. Now, I am going to, just so everybody knows, I'm going to share this with everybody, this scan. Again, the ThinkScript scans aren't guaranteed for Tiny Accuracy, but I'm going to send it through, and I'll show you guys how to load it up so you can have it in your individual scans as well. So, but I'd love to have you go back and learn this if you need to. Check it out again if you need to, because it'll all be here. We'll try to get this, under recording, get it approved and to get out. So, all right. Now, what I'm going to say is the 5, the 5 crosses. It wasn't greater than or any of this other stuff. It was crosses above the 20. And maybe we want it the same day. But we could also say within, which is such a beautiful indication here, because it's either going to be 1, 2, or 3, or do we say, I'm just going to say 2 bars within the last 2 bars. In this case, daily. We're looking at a daily chart. Notice up top, daily. Some of you guys are very, very knowledgeable. You guys go shorter term. Some of you go longer term. But what I'm talking about here are crossovers that are occurring on a daily. That's what this bars matches. Boom. You got it right there. There's your other arrow. It's whatever time frame we want. We talk about in this class mainly, almost all of it, 90% is the daily time frame. But just as a note, you can adjust that if you wanted to. Save it. Now I can click OK and I can scan this through. But remember, there was that one other element so that we don't get companies that are doing this. And then right there we get our crossover. Because folks, we were going to get crossovers here and here and here, but yet down, down, down. It's just rolling down the hill. The trend is down, and traders want to be on the right side of the trend, not the wrong side of the trend. I mean, it's just one of those probabilities that I think resonates with a lot of traders and investors. Let's make sure that the market is pricing it accordingly. All right, so you got this here. Now let's go ahead and click add condition, and I'm going to go over up top. And we're just going to do our last study, and that was price. Remember that longer term trend that we want to have confirming the trend direction? Closing price, as in today's closing price, wherever it's at right now, is simply not crossing above, not crossing below. It's just simply greater than the 50 period moving average. We know the 50 period moving average it's back in the studies, just like we found the 5 and the 20. Simple moving average, we found it, and that's it. And by the way, when I put the 50 in, I'm going to leave it because it's greater than. Let's just simply leave this as a 1 bar right there. All right, a 1 bar. Save it right there. And now, because that means it's above it right now. And if I click OK, we've got our system. So the last thing we need to do, this is the funnest part. This is the best button to push right there. When you're all done, it's so simple. Watch how quick we go through 500 companies. And by the way, I've got to show you just real quick. Those of you who haven't seen it, scan in. Extremely important. What on earth do you want to scan in? You want to scan in the S&P 500. I know you do, right? Don't you? Maybe. It's an established group of companies. It takes a lot to get on that. And we try to look for companies that have maybe a tendency to grow over time, possibly. They have earnings. Many of those companies are in the S&P 500. There's some liquidity factors that we always tend to tap into, right? It can be effective. All right, let's hit the scan. That was a lot of back talk. All that before just hitting that scan, and there you go, over the last couple of bars. Now, this is the S&P 500. Oh, I'm running it twice. I've got 2 in here. Oh, I know why. Okay, this top one, I'm going to kill it, but I'm going to do this. Let's scan again. Oh, I was running 2. Let me just make sure. I'm pulling it up so I can see. Closes greater than. This is, by the way, the code. So the condition wizard gave us the code. You can also see it right there, too. If you ever want to just type in the code, but so easy this way. 5 crosses above in the last 2 bars. Hang on a second. No, I didn't put 2. That's the problem. I want to see at least a couple bars. It's not in the code. Notice it's right in the code now. Good. We had a chance to kind of clarify that. Within the last 2 bars, now we might get a little bigger list. These are the ones that are just crossing above today. Healthcare, oil, and environmental services. All right, click on scan. Oh, we've got 10 now. Still, folks, a very, very small number you're going to get in here. What are we requiring? A lot. The 5 is greater than the 20, both SMAs. That's my greater than sign. Both SMAs, timely. Think how timely that is. 5 greater than the 20 plus greater than your 50 SMA. Trend up as well. You're not going to get a lot of these, but if I could just step back and show you what we're going to be seeing here, because I'll tell you what we're going to do. We're going to go through every one of these and look at them because they're so small. There's such a small number of them, and it's sort of a rare event that happens. It's this. Not just off the bottom, but maybe like a little bit more move up the runway, so to speak. If this guy's going to go, we're just sort of like a little further down that runway to what a trader might believe is unfolding, because you're getting the longer term, you're getting the shorter term, a crossing above both swing trade time frames, 20-day, 5-day, plus the trend. Few things going on. Let's share it right now so you guys have it. So let's do this right now. Let's go over here. And I've saved it right over in my scans. Shoot, I can just share this one right now as I've got it though. Let's just share this scan query because it's right there. Now I'm going to send this link right now into the box. Yep. Everybody likes to make, I get someone in my ThinkScript class, they're always saying, make sure you share. I think I missed it once out of 50 times, but boy, did I hear about it. I heard about it probably in the next hour. Share that script, Mike. People want it, because it is helpful. We'll just go ahead and just put a bow on this, and we'll call it a little Christmas gift because these are interesting. I mean, to utilize. Does everything always unfold this way? No, but it just like I showed you, it just is doing what it's showing us it can do, and that is a little bit of more of a down that runway of that potential price pattern. Cup and handles, flag patterns, inverted head and shoulders, this kind of stuff that you might see. Okay, so this is it right here. Call it the 5 and 20 cross, and it's a mechanical system. We're going to look at it right now, and we'll hit it. There it is. Okay, so you take that code, for those of you who haven't seen it before, take it, copy it, and put it right up here. Yeah. That's a ThinkScript gift. Okay, we'll call it, yeah. We take it, we'll go up to the top. We'll click on Setup, upper right-hand corner. Now, if you're on a Mac, you might just see the wheel, and that's fine too. Just click on the wheel. Go down to Open Shared Item. Hang on. Open Shared Item. Yeah, done it so much, I got to read the whole thing. Copy it in. I'm just going to go Control V, or I guess it's Command V in a Mac. Hit Preview, rename it so you can spot it. I always name it what it is. 20, 5 and 20 crossover plus 50 moving average for that long-term trend. You can spell that out however you want. Click on Import. Boom. When you do that, you go into your Scan tab, hit that middle hamburger icon right over here, the middle guy. Go over into Load, and you'll find it there, right there. Where's mine? Right there. The 50-20 cross plus 50 DMA. Folks, this fits right into that swing trade time frame. When you have it, go to your charts. Go to your charts, because this makes it so nice. I'm going to take, well, don't take my word for it just yet. We're going to leave the 50 on for just a second. And God, that 50 line is so big. Let me just narrow that guy down. Now I know why I used a 3. Okay, it gets thick. Okay, so now you can see the 50. Apple's not in our list. That was our example trade. Oh, that's the SPX, which also had that crossover right there, a little bit down the runway again. These are our 10 that come up. And how did I get to this? All I simply did, remember, your scans show up in your watch list. If you save them, I saved it as the S&P 500. So I'd have to change it if I wanted a different group, but it's a bigger basket, big overlap with the NASDAQ. I'm over here, bottom left-hand corner. Hit the plus sign, watch list, default, zoom on up to my personals, and you're going to find it there. Voila, right there. Do you see that little note right there, that little indication? That's a scan. And if I click on it, it's going to automatically populate, and I've got it up here too, but it will automatically populate all of the stocks that come up every single day and throughout the day for your scan. Link that guy up. Make sure it's linked in red so you can click on it. Let's hit him. EW. Let's go to a 6-month chart so I can see this a little bit more clearly. Okay. Do you see it? It's getting a little busy in here. I got a lot of lines, but there's the 50. I wanted to confirm we're above the 50. We did not get signals down here. We wouldn't have gotten them. We're below the 50. We want to be with that longer term trend too. We want to make sure the trend's already established. Otherwise, it could be a bear flag, not a bull flag, but it might show up the same on the shorter term crossovers. A lot of these are starting off with a positive, potentially positive earnings announcement being received by the market. That was positive, beat by about 8 cents, it looks like. Look over here with me, folks. Look, I'll draw it out. ThinkScript. Boom. Jump up. Using the ThinkScript. Look at this. Flag. Where are we getting it? Within the last 2 days. 2 days. We had it yesterday. We can change it too. You guys have the scan. You can change it anytime you want. Right there. You can change it. Did we cross over? We sure did. A couple days ago. Not today, but yesterday was the crossover right there. Do you see it? Look. Flag down, bounce. Mechanical. It's showing us that signal. And for some traders that wanting to test out the paper money, that could be the entry. Now, where's the exit on this mechanical approach? Potentially one entry and one exit if somebody does that. When you get just the inverse happening, prices going up and there is a breakdown. Now, just to highlight it, I'm going to put this in red. It's got a lot of colors here, but look at this. Let's just say that we were already trending up and we had this big move right here. Let's just say the trend's already much higher. We didn't go below the 50. We get a signal. Boom, it's right there. The 5 goes above the 20. 5 greater than the 20. Remember, that's our signal. 5 greater than 20 right here. And what are we getting? If we do this, where could the exit be? It's saying right there. That's when the 5 goes back below the 20. So somebody might be trying to capture a move somewhere in here, that range. That's, folks, is the mechanical approach right there. Now, some others in here, it's coming close to resistance too, right? Because we're only a couple days after, but maybe after it breaks above this high, somebody could look for a potential entry. FSLR, you see it? I know we pulled back a little bit today, but we also broke above a high, and we did break above here. So, will it continue on up? Very similar to the other ones. GD, kind of a nice, sort of a rounded area above the 50 and breaking higher right there. Again, Gilead, that was our healthcare. You guys could see. What I'm trying to get you to see is the underlying potential flag in there. Some may be more clear than others, and some may be just better in terms of what you're seeing. There it is as well. I'm using the 1 year gives you a little bit more leeway to or sort of background to see what's going on there. We've seen a lot of flags on a stock like this. I've never even seen it's in the S&P 500. Howmet Aerospace. There it is. Could we flag again? Think about watch list. ISRG, close to breaking above a range. There's Merck. Okay, Merck, more healthcare. ROL, another one I hadn't really looked at too much. Rollins. Okay. You guys see how it's giving us that space again. A couple more and we're all set. This guy's a little bit low. Now, what's funny about this one is there might have been, it's so close to its 50 period, kind of a longer term, maybe bull flag pattern here, big picture, just barely above the 50. And I mean just barely. Last one, XOM. Oof. This is a lot of ups and downs. Let's go ahead and take a look at EW right now. I realize, folks, we're right at this the edge of resistance, but let's just start this with a small entry here as an example trade. I'm going to go ahead and click on the trade tab because we want to have, I might add another one too. We're running out of time, but I might add another one to our list, and we can kind of follow up on this in just a bit, maybe next week. Okay, next thing I'm going to do is put this at 50 right now, 50 shares, and tab through. Make sure we're to 50 share. I've got the upside target and the downside target, potential target range that we talked about, with the stop. There's good till cancel, so it doesn't fall off. Let's hit confirm and send. Confirm. Let's just look at our order. We're buying this, setting it up as an example trade. And there you go. So there's our trade in here. I'm going to go ahead and put potential exit level just down below this point, okay? And then what I'll do is I'm going to use this guy, believe it or not, instead of the T1 target, which somebody might keep it at, right there. That's only like a point higher. I'm going to do this. We are going to drag this guy up and up and up, and then we'll be all set and ready to go right here. Okay, so if I drag this up, right here, here's our potential flag. Click it. Oh, 3 times the charm. We finally got it. Great. Okay, right click, activate it so I can point to where the target might be. Remember, this price range to this price range, drag it, simplest thing in the world. Click on that, hold it, pull it up, and let go. Let go. Send, there you go. There's your potential target and then a potential exit. Very close by. Now, some traders might say, you know what, Mike? Put it a little bit, maybe 50% below this range right here. Sometimes they'll bounce off that 50 right in here. So just be careful, be mindful of that, okay? There's your target, folks. We can set up some other ones, and I will look to set up some others here. The last thing I'm going to finish up on, MSI. We got a signal, but you notice the trend was down. Another one, IP. Got a signal, folks. We're below the 50-period moving average. I want to run it on a few of those, too, just so you guys had it. All right. Hey, take a book from Wiley right there, folks. If you did like today's presentation, do us a favor. Just smash that like button. Lets me know that you're getting value out of our discussion here. Wanted to leave you with that Think script. Again, those aren't guaranteed for time and ensure accuracy, but as long as the data is good flowing through, the Think script should unfold. That's what they're designed to do. And thank you so much. Folks, have a very Merry Christmas. It's been good being with you. Hope you have a fantastic new year as well. I think this is my last class before Christmas. And so have a terrific Merry Christmas and Happy New Year. And it's been great being with you. Thanks so much for everything you do, folks. And thank you, Brent Morris, for helping out as always. All right, everybody. Well, that is what we had today. Have fun with this. And folks, we'll look forward to future discussions. Take care, everybody. Bye-bye.